So, a couple of dental adjacent news stories out there this week that I thought would be interesting to discuss. The first is more on the line of education. So, as you know, many dentists spend a lot of money to become dentists. In fact, the average dentist graduating from dental school today is close to a $500,000 in student loan debt to obtain that education. Now, that's a pretty significant portion of money. Well, interestingly, a lot of people in the US are currently sitting on a fair amount of student loan debt. And we are entering a phase in which a lot of this loan brief stall out, I guess, which happened during COVID, where many of us were able to take pauses on our payments because COVID created a lot of financial burden. Well, that is no more. In fact, that actually started in October of the last year of Biden's presidency, and certainly is now transitioning through the Trump administration. We have many borrowers. In fact, it is estimated that now 6 million different US individuals with student loan repayment programs are in default, and at least 2 million of those will be entering the garnishment phase of that default, which is in excess of 120 days of no payment. Default happens after 90 days, 120 days goes into garnishment. So, for those of you who employ individuals who may have student loans, and for those of you who may owe on your student loans and haven't been paying on them, you might want to go check the paperwork, because we are entering a phase in which that is going to start to come to a head, I think. And we're going to see more employers starting to withhold up to 15% of your paycheck towards your loan repayments, as well as any tax refunds, Social Security payments, if you're receiving those. All of those will be susceptible to garnishment. So, unless the momentum changes, I think this could actually be a pretty significant challenge, which within the economic landscape, that will continue to see individuals defaulting on these student loans. They will impact your credit score as well. TransUnion was talking about that today in an article that I was reading, that these will ultimately start to show up on individuals' collection reports as well. So, just a heads up on that. Another interesting news story that came out just a day ago: the new administration has met with over 50 different medical insurance companies in the US to talk about some changes that need to be made. One major change that came out of that meeting that has been quite a buzz is medical pre-authorization. For those of you who are not familiar with pre-authorization, that is usually a hoop that is required for patients and medical providers to jump through in order to let the insurance company know that that the medical provider or the patient is intending to seek care to have a certain procedure done. So we'll put it in context of tonight's show. If you came to Jeff's clinic and he ultimately decided that you needed a sleep device to help treat your sleep apnea, he would then need to complete a pre authorization for many insurance companies that could take up to 90 days to receive a response back of whether or not you could be covered for that procedure. Well, the administration is saying no more of this. There should be a dashboard and a quick automatic answer. It's either a covered benefit or not, and transparency as to why that would not be covered for this patient. The hope is that it will cut down on an administrative burden for small practices, hospitals, and patients, but it will also increase access to care for patients who are waiting for those pre authorizations in order to seek care. I'm super optimistic that these changes will benefit both the medical practices and the patients. I'm somewhat pessimistic that insurance companies will actually follow through on what has been asked of them. But it has been made clear that either they make these changes collectively as a group and negotiate a change that works well for all, or the government and ultimately the federal government is going to have to get involved to say that these changes are going to be regulated instead. Me personally, I'd like to just see the insurance company solve itself, but we'll see how this works out. The last news story of the night: is, of course, that big, beautiful bill is still sitting up in the Senate. It passed through the House and is now in negotiations in the Senate. Why do we care about the big, beautiful bill here in the world of dentistry? Well, many dentists are also small business owners, and there are quite a few items of language in that particular bill that would have a direct impact. In particular, the SALT Act, which has been highly debated and highly contested over the last 3 or 4 weeks as this bill has evolved over time. As it left the House, they increased the cap to 40,000, which is the ability for a small business to deduct its property and local and state taxes out of its income so that it can reduce its federal tax liability. Well, they don't like that too much, so they reduced it. It was up to 40,000. They tried to push it back down to 10. Now we're sitting in this weird space where it is a deduction plus the greater of 40,000 or 50%. This now feels like I'm reading an insurance coverage. You can get one or the other, or 50% of the one or the other, making it super convoluted and more complex so that you can pay your accountant more money to figure it out. And with that, that's the news.